it looks like we have people still coming on, but I think we're fine to go ahead and start. And I will begin by welcoming our participants to, I guess this is our fourth webinar in the series. Since the COVID-19 emergency began, and our focus is sharing guidance and information from the Small Business Administration and the Department of Treasury related to programs aimed to help small businesses. I want to talk briefly about logistics. At the bottom of your screen, you will see a Q&A button. If you have questions, write your questions or type your questions into the Q&A tab. We're asking that you not use the chat tab, and here's why. We do not have the capacity to capture the chat tab after the webinar. We do capture everything that is typed into the Q&A tab. So in order for us to effectively answer the questions and distribute them to everyone on this webinar, we ask you to use that Q&A tab, limit your use to the Q&A tab. Our topic today, again, as I said earlier, is guidance for small business. We have not had any new legislation occur since our last webinar, so we will be following up on clarifying a lot related to the earlier legislation that was passed last Friday. I'm going to go ahead and mention to you that our panelists today are Terry Lammers and Steve Denny, Principals of Innovative Business Advisors. Steve is again our primary presenter. So Steve, go ahead, it's all yours.
Well, Marquita, thank you very much. Appreciate it. Let me pull the screen in here.
Now, we do not see a shared screen right now, so you may have to go into share so that we can see your presentation deck.
Okay, here it comes. Have you got it now?
There it is. Absolutely. Thank you.
Fantastic. Marquita, thank you very much for moderating these events. We appreciate all the time and effort you put into this. So folks, welcome to our fourth webinar. And there have been a lot of changes over the course of the last week. So this law, the CARES Act, was passed a week ago today. And over the course of the last 7 days, we've seen lots of clarity come out, and there are still many open questions. So we're going to tell you today everything we know to date. Everything that we know is verified through various government agencies, so we know the information is factual. We probably will not have all of your answers because there are a couple of particular questions that are still out there for and open for interpretation, and we expect the government authorities will be providing some additional guidance on those as we go forward. So our commitment to you as the audience is we'll keep updating you as we learn more. So let me just share with you what we're going to cover today. We're going to talk a lot about the Paycheck Protection Plan. We're also going to give you an update on the Economic Injury Disaster Loan Programs. We're going to talk a little bit about a new part of that that's come out, which are emergency EIDL grants. We can talk a little bit more about the Pandemic Unemployment Assistance Program, about the rebates. We've learned a couple of things about the rebates that we wanted to pass along to you guys. There are some special rules and other provisions that we'll touch on. And then finally, we're going to go over a borrower roadmap that we're recommending out to our client base and talk to you about why we think that's an appropriate course of action based on everything we know today. So let me start by taking you into the Payroll Protection Program. So this is just to do a quick review. The Paycheck Protection Program is an SBA loan program that is delivered through authorized lenders who elect to participate. So every current SBA lender in the country is authorized to deliver this if they elect to do so. And in addition to that, the government has expanded authority to all other depository institutions, credit unions, farm credit, and many others. And again, those other institutions that are not traditionally SBA lenders will have to elect to participate in the program. The Paycheck Protection Program is designed for businesses that have 500 employees or less. It is applicable to nonprofits as long as they're a 501c3. It is applicable for everybody that's self-employed. So if you receive earnings via a 1099, you're a contract employee, or you're a single member LLC or a sole proprietorship, this program is for you as well. It also applies to veterans organizations and tribal business entities. And this Paycheck Protection Program is really a loan from a lender. So think of it as a traditional loan, but it's 100% backed by the SBA. So there's no risk to the bank, and the whole backstopping of the program is 100% by the SBA. There is also no recourse. So you don't have to provide any personal guarantees. You do not have collateral requirements, and there are no prepayment penalties involved in this loan. And this is relatively new information. This was clarified yesterday. There are no fees for these loans, and the loans are administered under a 1% interest rate and a 2-year maximum maturity. So when I say 2-year maximum maturity, what I mean is these are 100% forgivable if you do all the right things, and the loan can be forgiven in a very short period of time. But if you use the loan, and let's say for the sake of example, that only 75% of the loan that you take ends up becoming forgivable, the remaining 25% will be on a 2-year maturity. So you'll have 2 years to pay it off. So how can you use these loans? They are designed to be used for payroll expenses. So that's why it's called the Paycheck Protection Program. So this is all about you as employers providing paycheck assurance to your employees. And the overall design of this particular program is focused very heavily on paycheck and payroll expenses of your business. We'll talk a little bit about how that's calculated in just a minute. But the payroll has an expanded definition as it relates to the Paycheck Protection Program. And that includes not only the payroll expense, but all of the benefits expense that you as an employer have for your employees. That covers, healthcare. It covers all types of leave, vacations, sick leave, personal leave, any type of leave that you pay people for. It also provides coverage for the insurance premiums related to the healthcare. If there are special matching funds for retirement or other benefit-related costs, all of those are included in the coverage for you as an employer. It also covers salaries, commissions, and independent contractors. And there is a big asterisk there, because there is a variety of opinions about whether you can apply for paycheck protection loan on the amount of money that you have paid your independent contractors. So what we're issuing as an opinion today is the direct answer is we don't know for sure, and this is one area where we think the SBA will come out and provide more information. You can also use this loan to cover the mortgage interest or rent/lease payments that you might have for your business. You can also use it to cover your utilities expense in the business, and you can also use it to cover the interest portion of any other debt that you're making payments on during the covered period. So all of these are allowable expenses that you can use the loan proceeds for. So let's talk a little bit about how you figure out what you're applicable for. So there's a very simple formula, and it starts with the average total monthly payments for your payroll costs during the prior 1-year period. So really what you do is the technical part of the law says you look at the last rolling 12 months from the 1st of February back. So you would really be looking at the period of February 1st, 2019 to February 1st, 2020, and figuring out what your total monthly payroll costs were for each of those prior 12 months, and then average that amount. So again, let's cover what's involved in payroll costs. So that can be salaries, wages, tips, commissions, benefits, vacation and leave costs, separation or dismissal costs, healthcare costs, insurance costs, retirement benefits, and state and local taxes. Not the federal side, only the state and local side. In addition to that, it does say today that you can include, in the law, it says you can include independent contractor, sole proprietor, wages, commissions, incomes, or net earnings, but there's a very strong difference of opinion about that between the way the law was originally written and some of the additional ruling notes that have come out. So we're going to keep an asterisk under that side of it. We'll also mention that it's limited to $100,000 max per employee. So if you have highly compensated people on your payroll that have salaries or earnings in excess of $100,000, you can only claim up to $100,000 per employee. So that is one limiting factor. So again, once you calculate all the costs for this in the prior 12-month period and average that, you're going to come up with a specific number. You multiply that by 2.5, and that turns out to be your maximum loan amount. Now, I want to also tell you that if you had previously taken one of the economic injury disaster loans, you can also roll that EIDL loan into this PPP loan, as long as your total amount is not more than $10 million. So pretty widely, pretty, I would say, definite description of what's included. And keep in mind that the whole part of this aid package is designed for you as an employer to provide paycheck protection for your employees over a 2-month period into the future. It's anticipated that this particular health emergency may only go for a short period of time. And that's why they calculated it that way. There is some guidance that says the SBA is anticipating that employers are going to use about 75% of the proceeds of the loan for the payroll costs and about 25% of the proceeds of the loan for the other things. And that's why they came up with this 2.5 multiple. Okay, a couple of special notes on this. For the people included within your payroll calculations, each employee must have their principal place of residence in the US. Again, I said earlier, the employee compensation is limited to $100,000 max per person, and you do not include your federal employment taxes or the employer's portion of those in the calculation. And I'll come back to that because there is another program that allows you to get 100% credit for the amount of money that you're spending in that area. You also do not include qualified sick and family leave wages for which you may have received a credit under the Families First program. And we'll talk about that a little bit more as we move on as well. And then finally, at this point, we think independent contractors cannot be included in the calculations. However, if you have independent contractors that are working for your organization on a regular recurring basis, please be mindful of the fact that independent contractors themselves can file independently on their own for paycheck protection program loans. So that's one of the underlying reasons why they are saying that you wouldn't include them in your calculations. So how do you determine if you're eligible or not? Well, you have to have been in business on February 15th of 2020, and at that time you had to have had employees or paid independent contractors at that period of time. So those are the two primary qualifications. And then once you are approved for the loan, you're going to have to certify that you're going to use the loan to support your ongoing operations, to support the paychecks of the people that work for you, and that you're going to use the funds to retain workers and only to make the mortgage or lease or utility payments as we described before. You've also got to certify that you don't have any other pending applications with other lenders. And this is important because there are going to be literally thousands of lenders across the country that are offering these loans. And what the intent of this is the federal government wants to make sure that you're not double and triple and quadruple dipping into the program. So you're only able to take one loan for your business, and you can only do that through a lender. And you've got to certify that you've not received any other duplicative loans under this program. So this loan program actually opened up today. So lenders are now taking applications beginning this morning for businesses and sole proprietors. And then next Friday, it opens up for independent contractors and those that are otherwise self-employed. So let's talk a little bit about the application process. So again, I want to reiterate that, you know, if a lender is currently certified as an SBA lender, they automatically are eligible to do so. And then there are a whole range of other lenders that are now in the process of electing to become lenders under this program. There is a standard application that is used throughout the United States. But what we've seen over the course of the last 24 hours is many lenders are putting together their own additional requirements regarding what they want as part of the application process. So the best counsel that we can give you is you ought to reach out directly to whatever bank you are currently using, find out if they are providing these paycheck protection loans, and if so, are they doing that for all of their customers? And generally what we found is that most of the banks in our area are covering their customers first and then new applicants after that. So we encourage you to reach out to your existing bank first. Lenders have got to verify from you as an applicant that you were in operation on February 15th, that you did have employees, and that you had some of these other expenses, and then they will go through a process of verifying the dollar amount of your average monthly payroll cost based on the information that you provide to them. Please be aware that the application deadline for these loans is June 30th, or until the money runs out. And I would tell you there's a finite amount of money for these, so I would say that it's in your best interest to go ahead and make application if you are in need of these as soon as you can. One final note: the law actually requires, or actually authorizes, agents to help you as well. And I just wanted to point out that these are the types of companies that are eligible to be of assistance to business owners as authorized agents. So that is limited. We think there probably will be a lot of new companies that come out of the woodwork offering, you know, for a fee to be able to provide you for all of the things that you're available. I would encourage you to be wary of that and take a good look at them as an organization before you send them any money. All right, so let me move from that over to the economic injury disaster loans. There's one thing in common between the economic injury disaster loans and the PPP loans, and that is that if you receive one or both of those loans, and you can actually apply and receive both of them, the other thing is that there are automatic deferrals of payment that take place for both of them. So what that means is if you're approved in April and the funds are dispersed to you in April, your payments don't begin until 6 months afterwards. And SBA is going to be covering the principal and interest for that 6-month period of time. So a couple of things that are specific about economic injury disaster loans. And these are a completely different classification of loan that are handled directly by the SBA. So the first major difference is the paycheck protection loans are handled by lenders. EIDL loans are handled directly by the SBA. One thing that the SBA does, which is different than what we told you a week ago, is they are now waiving all of the 1 year of operation requirements. So, a week ago, we told you that you had to be in operation for a year in order to apply. The SBA has waived that requirement. We also told you last week that there were going to be personal guarantees that they were going to require of the borrowers under this program. Well, the SBA waived that requirement for any loan less than $200,000 and went further to say that it's at their discretion for loan amounts above $200,000. The other test that used to be in place a week ago was you had to use the SBA economic injury disaster loans as the lender of last resort, where you didn't have an ability to get credit anywhere else. Well, they've waived that as well, so that requirement is no longer there. And then they've also waived the requirement to provide tax returns along with your application. An incredible new enhancement that they've put in place is they are now providing advance amounts, which they call grants, of up to $10,000 on your application. And these grants do not require repayment. So the SBA has even gone further to say, if you make an application and receive a grant and later get turned down, your application gets denied, you still do not have to repay that grant.
Hey, Steve.
Yes.
Hey, this might, I know this might be a little bit premature, so if you want us to move on, that's fine, but we are getting a lot of questions about what we talked about before the webinar on, how does the grant affect the PPP, but then we talked about the process of the EIDL right now, and really, you still need to apply for the $10,000 because that gets in the queue if you need more money from the EIDL. So I don't know if this is a good point to talk about that, or if you
Excellent.
want to address it later.
Yeah, thanks for pointing that out. So a couple of things. How does the grant work of $10,000? Well, the SBA has changed the application process. You do it all online now for the economic injury disaster loan. And after you finish typing in all of your specific information regarding your business, one of the last things it asks you is there's a big blue box that says, do you want to apply for the grants of up to $10,000? And it's a simple checkbox. You either check the box or leave it blank. And that actually does get you in the queue and may enable you to receive an immediate grant of up to $10,000. Now, there is some people that are out there talking about, if you receive a grant, that may reduce the forgivable amount of the PPP loan. On all of the rules that we've read, we don't see anywhere where that's spelled out. So there's a lot of misinformation out there. We're basing everything we're sharing with you as an audience based on the actual documents that we're receiving from the government authorities on the final ruling. And we don't know whether or not that's the case. The only thing we know to be a fact is what the SBA has stated regarding these grants in their prior communications. And that's what we're sharing with you today. So there may be some requirement where they tie the repayment of these grants back into the PPP program. But as of today, we don't see that in writing anywhere, or we'd be sharing it with you. Terry, do you think that covers it? Terry, you're muted.
Yeah, I'm muted. My wife would love to have a button like that. Yes, I believe that covers it. So it's one of those, I think the only other thing we can say is there is a lot of little nuances, and there's we're getting hit with some crazy things. And as Steve said at the beginning, what's in our slide deck is what we see in the SBA requirements. So there's a lot of moving parts right now.
Excellent. So let me move on and tell you that one of the big differences between the PPP loans and the economic injury disaster loans is how you can use the money. So there's a couple of key things to think about and understand. The economic injury disaster loans are not there to provide revenues that you may have missed because your business is closed or because you have a significantly lower demand on your business based on the fact that people are sheltering in place. You can use it, however, for working capital, all the aspects of working capital. You can use it to pay your fixed debts. You cannot use it to refinance your debts, but you can use it for all of your accounts payable and operating expenses. So the key distinction is the EIDL loans, they're not there to help you recover revenue. What they are there to help you do is cover all of the expenses that your revenue would normally cover. And, you know, again, I want to emphasize, you cannot refinance your long-term debt with your EIDL, and you may not use the proceeds of EIDL to cover lost profits that you may have in your business during this health emergency. So the big distinction, it's not there to make up for the sales that you've missed. It is there to help you cover all of your operating costs so your business can stay up and running. The other thing that I'll emphasize is right now, it's online express application. So there are no forms that you have to submit. Last week during our webinar, we gave you guys all the forms, gave you a practice set of forms, and then the actual forms for submittal to encourage you to make sure you practice first, got all of your numbers right before you submitted them, so you had an accurate submittal. Now they've changed it. You do everything online, and they ask for a lot less information. So very, very streamlined application process. Okay, I'm going to move on from the EIDL into the Pandemic Assistance Unemployment Program. There's been a lot of confusion about this, and this is a brand new type of unemployment insurance. Basically what this covers is this is designed for the sole proprietor, the self-employed individuals, and the independent contractors, the gig workers out there, and the others that earn their money via a 1099. And generally those people are not applicable for unemployment insurance assistance. But they have, the federal government has created a pandemic assistance category, which is a temporary category that allows people to self-certify that they are available and able to work, and that they are primarily generating their income from self-employment, and thus are eligible for unemployment because they can't get it anywhere else right now. They also have created another new type of unemployment insurance that they call short time. And short time is really quite interesting. And what short time allows you to do, in the state of Missouri, they call it Missouri shared work. And in the state of Illinois, they call it sharing the work. So what short time allows you to do as an employer is if your business is still open, but doesn't need all the people that it traditionally had over the same amount of hours, you can schedule people for less than, in some instances even significantly less than what they were previously scheduled to work. So you keep them on as an employee, you don't furlough them, but you keep them on as an employee, and you pay them a few hours of work that you can actually use them for. The balance of what they normally would have earned is covered by unemployment insurance. So this is one of those unique situations where you do not have to be unemployed. You can still maintain your status as an employee of the company and not be furloughed, and receive unemployment insurance, you know, during that period where you're working less than your regular hours.
Hey, Steve, I know we looked yesterday on the Illinois side that this is pretty fuzzy yet. It doesn't appear to be up there, but on the Missouri side, is it up and ready to go? And does the employee or the employer apply for that online?
Yes, so it is up and running on the Missouri side. The site crashed yesterday, I'm assuming because of demand. And Illinois just passed the law. So as of 2 weeks ago, there were only 27 states that had laws that allowed this short time work. And then Illinois quickly passed a law in concert with what came out under the CARES Act to allow this type of thing. So Illinois, and I'm sure there are other states that are doing the same. So the Illinois site may be a little slower in coming up, but they do have what they call Illinois Sharing the Work, which is the name of their program, and it is coming back up. So for those pandemic assistance folks and the short timers, there's also this additional $600 per week of unemployment insurance that comes out, but that's only for a very limited period of time. That only runs for the 4-month period from April 1st to July 31st. So a couple of other things that they've done when they changed the unemployment insurance, they've eliminated the state waiting periods. Some states like Missouri had a 1-week waiting period before you could actually begin to collect. That's been eliminated as well. So again, there are some significant changes to the unemployment insurance. And as an employer, we recommend you take a good look at all these programs before you act, because there may be ways that you can get some benefits from them for you or your people. Let me move on to the rebates, which we've all heard a lot about on the news. These are the checks that the IRS apparently is going to be sending all of us that at least file our taxes. And the way this works is it'll be $1,200 per individual, $2,400 for couple, and $500 per each qualifying child. They're calling these the 2020 Pandemic Rebates because they are actually credits against the tax that's imposed on your 2020 return. But it's a tax credit, so you will not have an income penalty against your earned income on your 2020 return. The IRS came out yesterday and said that they expect to begin to distribute these the week of May 4th for those people that they have direct deposit information on, and begin to start printing and mailing checks for those that they don't have direct deposit information on, beginning on the week of May 18th. And their formula for distributing these funds is quite interesting. They're grouping people into brackets based on their AGI, their adjusted gross income. And they're starting with those that are in the lowest AGI group and working their way up to the highest AGI. And the rebate checks phase out beginning at 150,000 joint, 75,000 individual, to the point where if you've earned 99,000 single or 198,000 joint in the last tax period that the IRS has on file for you, which may be 19 or 18, that's the phase out point. So just a little bit of information about when those are coming and how that program works. They've also made some significant changes regarding how you can use retirement funds in this unique health emergency. So if you're able to tap a resource that you have available to yourself, you can now do so without penalty. So basically what they have done in this law is allowed you to be able to withdraw up to $100,000 from your retirement accounts without triggering a taxable event. And they also have given you a couple years whereby you can repay that money back into your retirement account without triggering a taxable event as well. So basically it's allowing those that are able to use their own money without penalties during this health emergency. And for those people that are currently having to take minimum required distributions, they're going to temporarily waive that for this year as well. So you won't necessarily have to take a temporary distribution this year per the current law. All right, employee retention credit. So we talked about before how under the PPP program, you cannot apply the employer's portion of Social Security taxes as part of that payroll cost. And the reason is because they created this employee retention credit for employers. So what this is every employer pays federal tax withholding on a portion of the Social Security taxes for each of their employees. And now what the federal government has enabled you to do is take an immediate credit against that. So let me tell you how, just a quick sample of how that works. Let's say during the month, the portion of your payroll for sick leave benefits, including the payroll Social Security, the portion of your payroll for sick leave benefits was $5,000, but your total monthly employer Social Security taxes were only $4,000. That means that the IRS would owe you an immediate refund of $1,000. So they're allowing you to use the federal portion of the employer Social Security taxes to cover the applicable wages that you would pay folks while they're out on leave. And it's a nice way to use federal money to make sure that you're keeping paychecks flowing to the folks that work for you. Final two provisions were under the labor. They are putting some provisions in play so that you can quickly rehire laid off employees so that they can be included in the loans. That's what the Paycheck Protection Program is all about. I just talked about advancing the refund credits to you. So if your credit is larger than your federal tax expense, they're going to advance the difference to you in a refund immediately. And they've got some other changes in there regarding the employee benefits plan. And then on telehealth, dramatic expansion of telehealth, expanding it into all areas of medicine. Now any licensed medical provider can practice using telehealth, and they've included any expenses and costs under the Medicare Part B for reimbursement. So some pretty huge changes there. So quick summary, and I'll get into the roadmap, and then we'll go directly into questions and answers. There are two primary programs: the Paycheck Protection Program that's delivered directly by lenders. So that program is designed to cover payroll. That is a fully forgivable loan. In addition to that, there's the economic injury disaster loans, and those are SBA direct loans. And we talked about how you can use those for all expenses of your business, including working capital. And there's even that partial grant now of $10,000. There's in addition to those two, there's what they call an SBA Express Bridge Loan Program. So the SBA Express program is delivered by lenders also, and they have set that up now for a fast turnaround where a lender can turn around and give you an immediate loan of $25,000, and they can create a full bridge loan for you up to $1 million if necessary, and it has a 50% SBA guarantee to it, and typically they will turn those loans around in 36 hours or less. Now the nice thing about the bridge loan is, if you're in an immediate cash strap situation, you can go to your bank and pull the SBA bridge loan and then roll that into your economic injury disaster loan when you're approved for that economic injury disaster loan. So a nice way for you to get the immediate need while you're waiting on the federal government to come in with the additional loan. So when you think about how all these programs work together, we think it's in your best interest if you think of them in this order. So first off, make sure that you're using everything that's available to you under the Families First Leave Act, all of the tax credits. And the reason for that is because you cannot use the PPP loans for that. So make sure you're getting full benefit of that before you take a look at the next program, which is the whole unemployment insurance shared work program. So make sure you're taking advantage of everything that's available to you as an employer under those programs as well, because PPP won't cover those. After you've got those two bases covered, then you can either use the SBA Express Bridge Loan and roll it into an EIDL loan, or go direct to the EIDL loan. And we strongly recommend that you make application now and apply for those grants, because there are, as with all SBA loans, you know, there's an appropriated amount of money that the SBA can loan out every year. And when they run out of money, the loans stop. They have to wait on Congress to give them more money. And we've experienced in the past that that doesn't happen. Sometimes they just wait till the next year comes along. So take a look at third base is using one or more of those products. Either use the SBA Express Bridge Loan and then roll it into an EIDL loan, or just go and do the EIDL loan. And then after you've got all three of those bases covered, then go directly to your local bank and do the Paycheck Protection Loan Program. Now, there's another couple of interesting things that work in your benefit in that regard. The SBA EIDL loans are longer term loans, but right now they are at 3.75%. So if you think about this, the Paycheck Protection Loan is only a 1% loan, and you can, as I said earlier, you can roll the EIDL loan into your PPP loans. So, you know, it might make sense for you if you've got to take out a loan to try and do so at the lowest potential interest rate. One final fact that I want to share with you. If you currently have an SBA loan, either a 7A loan, a 504 loan, or even a micro loan, the SBA is now offering to defer your payments for principal, interest, and fees for 6 months on all existing loans. If you're in the process of getting a new loan, the same thing applies. For any new loans that the SBA is issuing from now till September 27th, they are going to defer the first 6 months of payments. So we've covered a lot of bases. A couple of resource sites, and the deck will be available to you. And with that, Marquita, I'm going to turn it back to you for questions and answers.
Okay, Steve, thanks so much. We have quite a few questions. And here is something I think we ought to address on the front end of this Q&A. And many of these questions have to do with specific participants' experience today, yesterday, or last week relative to applying for these loans. Specific anecdotal evidence of what happened when they applied for an EIDL, substantial anecdotal evidence around what happened today as they applied for a PPP loan. And I thought, Steve, you might want to address just a sense of what we see going on in the banking community. Certainly the EIDLs are direct to the SBA on their website. The PPPs are to your bank as an SBA lender. Can you talk a little bit about the queue, what's happening, and what we're seeing across the banking community now?
Yeah, absolutely. So we've been engaged with the SBA throughout the last several weeks, and with a lot of different banks. And folks, obviously we're in unprecedented times. We've never in our lifetimes experienced anything like this. Well, neither have the banks. And the amazing thing is nobody's ever seen the federal government move this fast before either. So if you think about this, they literally wrote that legislation over the last couple of weeks. You know, that seems like the House diddled with it for about a week after the Senate got it passed. And then the president signed it immediately, and it went into law a week ago today. So here we are 1 week later, and lenders are actually taking application and being prepared to dispense loans. And candidly, none of us have all of the answers. So the Department of Treasury and the SBA is acting very quickly. They're providing a lot of clarifying information. We fully expect that there's going to be additional clarifications moving forward. We don't think it's, you know, it's final and definitive yet, because there are just an awful lot of questions about the application of these loans. So what I would encourage you to do is, you know, I know the banks are totally overwhelmed. We just saw 10 million people file for unemployment insurance in the last 2 weeks. I mean, think about that. 10 million people filing for unemployment insurance in the last 2 weeks. And a normal weekly unemployment insurance filing is around 200,000. So, you know, just give you a sense of how stressed the systems are in these regards. So we're doing our best as a company to give you up-to-date factual information as quickly as we can receive it. And I would tell you that our discussions with banks, every single bank we're talking to, we're hearing a lot of different things about the way they're going to be rolling these programs out. Banks are not generally known for their nimbleness and you know, quickness to respond. They're typically much more studious and much more cautious. So I think this is catching everybody a little off guard.
Yeah, and I think it's important to note, Steve, that, you know, of all the banks that we talked to today, it is all over the place. From one bank saying they don't expect to disperse funds until the end of April, beginning of May. Another bank saying they already have an online portal up and they expect to turn loans within 72 hours, and they are taking new customers. So there's been several questions about, I went to my bank and they're not taking new customers. You know, I went to my bank and they can't seem to help me. And I called a couple of other banks and they're not taking new customers. I would say, you know, email one of us, and we do have a list of banks that are taking new customers, so we're happy to help you there. You know,
Yeah, we're engaged with them as well. And we're trying to, that's the number one question we're asking them is, are you only serving your existing customers or are you taking new? So we definitely want to be a resource for you.
Okay, Steve, if you could address this question. Ryan asks, and he's posed the question both in the context of PPP program and the EIDL. They're different programs and they're originated at different places, one through the SBA, the other through a bank. But he's specifically asking about underwriting. For my LLC, for all owners who have a minimum of 20% ownership, will the owner's credit be checked? So he's essentially saying, what is the underwriting criteria for each of these loans?
This is really up in the air right now. So if you think about this for a minute, the bank has zero risk. Okay, so the bank is 100% SBA guarantee here. They have zero risk. The law actually absolves the bank from even making errors during this process, right? So the bank generally has to follow, you know, pretty stringent banking laws, and many of those have been taken exceptions for this process as well. But really, there's no risk on the bank. The bank is paid a flat fee on the administering of these loans, and the banks are given delegated authority to make the loan decisions and to service the loans. And you're going to go to the bank and work with the bank on whether or not the loan is forgivable if you meet the specific criteria that the law lays out. So the purpose of telling you all that is we're hearing all kinds of different things from different bankers. So some banks think in terms of traditional underwriting. We've heard from other banks that are saying, no, we're just going to get the application and boom, and hand people the money because we're backstopped.
Yep,
So,
and that's a good point to pick out. I mean, because we have seen banks that are, you know, asking for 20 different things. I mean, you know, financial statements, tax returns, personal tax returns, you know, the whole gamut as if it's a regular loan. But I've seen, you know, banks and talked with people today that they're literally, especially if they have a working relationship with the bank already, you're giving them their payroll information, you're giving them the two-page application, and that's it.
yeah. So I would say it's all over the board, and we can't tell you, but what we have heard more often than not is that banks are giving preference to their customers. So that's why our general recommendation is call your bank first.
Okay, great, Steve. Thank you. So Frank asks the question, and first he makes a statement. He says that he understands that a minimum of 75% of the PPP loan allocation must go toward payroll expenses, and only the residual 25% can be used for interest, rent, utilities, etc. Number one, I want to ask you, Steve, number one, is that true? And if that's so, how would you pay any other allowable expenses?
So I would take exception to that because it doesn't say must. We've got you know the most recent ruling that came out last night from the Department of Treasury and the SBA, and it talks about in their examples they use that 75-25% examples, right? And I think the SBA even talks about how they've modeled the loan program that way, but the word must is what I'm taking exception to here. I don't see the word must in the laws.
Okay, thank you for that. Okay, more clarification, and I have about 3 or 4 questions on this. If I have already applied for an EIDL loan and I have not yet received my $10,000 grant, what really is the interaction for the EIDL and the Paycheck Protection Program loan, will that $10,000 grant portion of the EIDL be a reduction to my PPL loan, or PPP loan rather?
Yeah, so we don't know the answer to that yet. We've heard that I'll call it a rumor circulating around right now, because there isn't anything definitive that we can see in the laws or the guidance coming from the government on that issue. So if you think about this a minute, the EIDL loan is direct with the SBA. The PPP loans are direct with lenders with an SBA backstop, okay? There isn't a direct link between those two loans unless you roll your EID loan into the PPP loan. So, the interesting thing about the SBA grant, what I can tell you, what the SBA has come out and said is, if they give you the grant and you are not approved for an EIDL loan, they forgive the grant immediately. You do not have to repay it, and there's no tax consequence to that grant. So I cannot definitively answer whether or not it's going to be applied against the forgiveness under the PPP or not. We just simply don't know, and I don't know that anybody knows yet what the answer to that question is.
One thing, Steve, I can say based on my view, as I shared with you and Terry earlier, I've made at least one application and for PPP, and did receive instructions from another bank regarding the application process. Both banks asked specifically on the application, have you applied for an EIDL? So there
Yes.
is a tracking mechanism to the bank as to whether or not you've applied for an EIDL, and you have to certify whether or not you've done that.
Yeah, we'll see. I fully expect that over the course of the next, week, 2 weeks, maybe even 3 weeks, we'll continue to receive additional guidance on this.
Okay. Here's another question. You might talk generally to this to the degree that you know, Steve. Is the pool, the overall pool for the Paycheck Protection Program is believed to be around $389 billion, which when you calculate and extrapolate out to the number of small businesses and the payroll of those small businesses, is extremely insufficient to cover that amount. What are you hearing, or what do you understand in terms of when these funds will run out? What happens if the funds run out? What do we anticipate going forward?
Well, the amount is actually $349 billion.
Okay.
So the amount that was authorized in the CARE Act is $349 billion. And yes, when you think about, there are roughly 30 million small businesses in the United States that fit within the category limits of the SBA small business programs, which these are designed to help. It's not a lot of money per business in that regard. That's why, for our clients, we're recommending that you don't wait. You get in line and apply for these. Now, here's the other thing I'll tell you, particularly as it relates to PPP. Do not apply until you've got your ducks in a row. So we've given you the definitions of what's included. Make sure you've got all your information together, because if you just go in, with a stack of papers and say, help me figure this out, banks are so flooded. I think that probably what they're going to say to you is, we'll be happy to help you. Go stand over there in that queue. Go to the back of the line, while we deal with everybody else that's already got their numbers together. As it relates to the EIDL, it's an incredibly streamlined process online. We've been through it multiple times now, and I think it's very easy to do, and everybody ought to be able to do it in 15 minutes or less.
Okay. The next question is from Angie, and she asks, we have shared work in the past. So they were in a shared work program. I think this is a Missouri program.
Yep.
Is the reduction in hours per week still 20 to 40%? And is there any impact on these programs relative to having shared work?
So there are a lot of details regarding that. I think it's a larger reduction that they're allowing now, but I don't have that law at my fingertips. I'm sitting here with the PPP plan in front of me. But yes, there were significant changes to that as well. And I think it just expanded the eligibility.
Okay, so that's one. I've got probably 3 questions related to Missouri shared work, and they're quite similar. So I think that what we might do is do a little bit of research and answer these as follow-up questions after the webinar, Steve, unless you want to address some of them now.
Yeah, the whole bill, let me just say the bill, the CARES Act, we distributed that on our last webinar as well. We gave everybody a copy of it as part of the downloaded material. It's about 330 pages, but we'll do the research, Marquita, and see if we can get the direct answer to the questions.
Great. Okay, this person asked the question, I'm a single member LLC and I employ 3 other full-time staff. I pay myself in part about half of my compensation by wage via paycheck and the other half by owner draw. Can I count my owner draw in the PPP formula?
We believe the answer to that is yes, up to a maximum of $100,000 total.
Okay, great. Okay. I'm looking at the PPP application. It asks you to calculate your monthly payroll average and then multiply that by 2.5, and then EIDL to get your loan request amount, and then add EIDL to get your loan request amount. Why would it ask what the EIDL is? I think I know the answer, Steve. Why don't you go with that?
So the answer is if you already have an existing EIDL, you would know what that amount is. But if you have an EIDL application, let me remind you, it's a 3-step process to obtain an EIDL loan. So the first step is you apply online. The second step is a SBA counselor will actually call you, and you will have a phone conference with an SBA counselor. And during that conference, it will be determined what your EIDL amount is, and they will let you know. They'll give you an indication of whether they think you're going to be approved or not. The third step in the process is once you are formally notified whether you're approved or declined. If you're approved, they will actually forward the loan documents to you. And as soon as you accept the loan documents and sign, they will disperse the funds to you. So I think that banks are using the standard application, and that line item is for if you already have an existing EIDL loan out there.
Okay, Steve, several people have come on and asked for a list of the banks that are willing to work with people who have not historically been clients. How do we want to handle that? I also see some banks who have made comment to me that they are willing to work. Do we want to try to match those up on the back end? Say a little bit about how we might respond to people who are actually on this call regarding either making that recommendation or not.
So if you go to the SBA.gov website, there is a link for participating lenders. Excuse me, and you can download that link. We have done the same for the St. Louis district office, which is our primary trade area, and we are reaching out to all the lenders that are on that list to get some information from them. We don't have any information to share yet, but we do anticipate over the next several days we will. But for right now, you can go directly to the SBA.gov website, and whatever district you reside in, whatever SBA district you reside in, you can pull the list of lenders that are currently participating lenders in that marketplace.
Okay, Carla asked the question, some of her employees are laid off already and she can't bring them back for a while. And she's already applied for the PPP loan. Are you allowed to use payroll wages for the first 8 weeks after the approval of the PPP loan for forgiveness, or can you use payroll wages through June for the PPL loan PPL loan. And yeah, okay. Does that make sense to you? I put the word forgiveness in there inaccurately as I was stating it.
Right.
So essentially she's asking, must she use this in a specific period of time, or can she take it out further if she has excess funds from her PPP loan?
So the PPP loan is designed for you, and particularly for Carla's situation, for her to, once she receives those funds, it would be anticipated that she would recall some of the employees, right? And use those funds to pay the payroll expense for at least the next 8 weeks. So that's the anticipated use of those funds. You can also use EIDL funds for payroll purposes, right? But that's the programs are a little bit different. You can use EIDL funds for a lot more business expenses as well. So hope that answers the question, but it is anticipated that if you get PPP funding, you use that to bring people back onto your payroll, recall your workers, and have the funds to be able to pay them.
Okay, thanks, Steve. Jonathan asks, how is the loan amount for EIDL calculated? What do we know about that?
So not a lot. And you know, the Economic Injury Disaster Loan Program has been around for a long time. And typically it's in the past, it's relatively easy because it was generally used to cover property damage for things like tornadoes and hurricanes and so forth, right? So it's relatively easy to figure out what the economic impact is when you have, you know, an effect on your business due to, you know, a weather event like that, which is how a lot of them have been used in the past. This is a little bit different because we don't know how long exactly this health emergency is going to go on. We think it's only going to be a few months, but it could potentially be longer. So what the SBA did tell us is, if you apply for an EIDL loan now, and you're using the best information, and you get a loan, and that loan gets you through a couple of months into the future, but the health emergency continues beyond that, you can reapply for an additional EIDL loan, and they'll roll those together to a larger amount.
Okay, great. This is the last question. We're at 4:02, and we're going to bring it to a close after this question. Dave asks, I understand that Innovative Business Advisors will assist in the loan application process for a fee. What do you do, or what does that give you?
So basically, we work with each business owner to make sure they get all their information together and figure out what's the best route of aid application for them for all of these programs. So that's basically what we do. To pull all of the information together that's necessary for the various type of programs, it involves getting different pieces of information from different parts of your business records. Clearly, business owners that are savvy about their financial records and so forth can do it by themselves, but if they want some help, you know, our hourly rate is $2.50 an hour, and we are offering our services to be available to them on a per hour basis to book one of the professionals of our team to help them sort through all of their business financial information and pull the appropriate information out for the various programs that they are available to receive aid under.
Okay. There are a few questions we did not get to, and we're actually beyond the 1 hour. So I'm going to hold those questions. As in the past, I will remind you that you will receive post-webinar a copy of the recording of the webinar. It will be posted on YouTube, and you'll have a link to the recording of the webinar. Additionally, you will have a link to our Google Docs, where you will receive a copy of the presentation deck, and we will pull down and transcribe the Q&A that occurred. Some of these questions and answers you heard online live. Some of them we answered in the background, but we will pull all questions, and it looks like we answered about 94, 95 questions during today's webinar. You will receive that post-webinar. So with that, I want to thank the participants, but at the same time, I want to give Steve and Terry both one last opportunity to make comments before we close. Terry?
I think I would just tell people that anything this big, there's a lot of information out there and there's a lot of misinformation out there. So, be careful who you heard it from and, what your sources are. And, the other thing is this is a very fluid situation. Things that were said in our webinar or last Friday have definitely changed from today. So a lot of the question I was answering during this was people said, well, I thought you had to do this. Well, I thought you had to do this. Well, a week ago, that is what you had to do. But, it's all changing very quickly. But, apply for the programs now, get your name in the queue, and, we'll see what happens. And we'll keep having these webinars to keep you up to date.
Okay, great. Steve, any last comments?
Yeah, exactly. I just underscore that. So we're working hard to stay on top of all of these programs as they change and additional guidance comes out from the various government authorities. Our commitment to you is we'll continue to provide on all of the information that we receive. We'll continue to provide it to you guys on a weekly basis. And keep saying your prayers. Let's hope we get beyond this health emergency in short order. But until then, you can rely on this source to deliver factual information for you. And we really appreciate you guys investing the time to listen to these. And, as Marquita said, we will get all your questions answered and get the material posted out there with additional things that we come across as well. So thank you very much, and hope you all stay safe.
Okay, thanks. We'll close the webinar down now. So thanks everyone for participating.